Welcome in. I am the CryptoBullGod, and I'm here to discuss what is next for Bitcoin. I know it's been a long time since I've created a channel. The time away from YouTube has allowed me to re-strategize and refocus the direction that I want my channel to go. There will be more updates to follow on that. I'm very excited about it, though. But today, what I want to do is I really want to keep it very unemotional and stick to the logic, point out some charts here, and share with you what I see coming next for Bitcoin. So just a quick disclosure that none of what I'm sharing is financial advice. I'm simply looking to educate and to help others. So with that in mind, if you appreciate the content, hit the thumbs up button, drop a comment, subscribe to the channel, hit the bell icon, because all that stuff's going to help me out as a content creator. So let's get into it. What we're going to do is we're going to zoom out in the charts, and then we're going to take a more granular look and kind of zoom in on smaller time frames. But we're first going to zoom out and look at a monthly view here. Let me share with you what I'm seeing here. So I have two trend lines drawn here. I want you to really focus on this black trend line. You'll see ever since around November to December of 2019, we have respected this black trend line, okay? And I have red circles depicting that. We almost touched that black trend line last month in May. Now, the caveat is we had a black swan event occur in March of 2020 where in 1 month we temporarily broke, you can see below this black trend line, and went all the way down here to, I don't know the price off the top of my head because the camera's blocking my way, but somewhere in the $3,000 to $4,000 range. It was a quick capitulation wick. But the next month we broke right back up above it. You can see in April 2020, and we've been holding this as support. So right now, the reason I'm charting this out to you is I'm suggesting, and I don't know if anyone else has pointed this out, but this trend line, this black trend line, minus the black swan capitulation event in March of 2020, it has held as an area of support. We're right at that area of support right now. Now the gray line, the one that I have drawn in faint, the reason for that is because I really wanted to focus on the black line. This is an area of support since December of 18. So you can see here, we had a touch here, a touch here, a touch here, almost a touch here. And then we wicked through it and resumed up in March and April of 2020. So I just want to point out the rather obvious fact that as much emotion that currently exists in the market, we are holding a key area of support. So really zoom out and take a look at that on the monthly. The other thing to take a look at on the monthly that I wanted to share with everyone, and let me remove these blue circles. I had intended to do that before the video. I originally had an area of ascending support here drawn. You can see a touch here, a touch here, and a touch here. We broke that area of ascending support, which is not good. But the other thing I want to point out here, let me move my face out of the way. There's an RSI horizontal area of support right around 43 to 44. Now, we touched this all the way back in 2015, okay? We kind of rode it a little bit before we resumed price action back up. Now, you'll see, and I was here for this beauty, back in December of 2018, we came all the way down here to 43, 44 area. And then as soon as we hit this area, again, you can see we bounced up similar to back here in 2015. Okay, so a few times here it's held as an area of support. Well, look where we're at right now. The RSI on the monthly is at 46. Could we go lower? Yes. Could we hit 43 or 44? Yes. Could we break 43 or 44? Yes. But again, I'm not here to point out certainties to you. Everything that I share on this channel, everything that I share on Twitter, it's about probabilities and using historic data to tell us the most likely direction for price, right? So I am simply pointing out that the relative strength index on the monthly chart for Bitcoin is telling us that if we haven't bottomed, if we haven't perfectly bottomed and we get maybe a capitulation wick that goes lower than our $25,000 capitulation wick in May, we are very close to a bottom. And historically, it presents an incredible buying opportunity. Visually, let me show you something else that kind of speaks to the generational buying opportunity that this offers right now. This is the 10 SMA. This is the 10 simple moving average on Bitcoin. You don't need to be a technical analysis guru to understand anything other than ask yourself this question. Look at the blue line. Okay, let's look. We can go all the way back here to 2015. Look at the blue line. Look at how often we've been under the blue line. Look at how often we've been above the blue line. Okay, this is like a kindergarten exercise. Okay, now the times we've been under the blue line, okay, the times in here, once we got above it, we skyrocketed, right? We stayed below it. If you had bought in here, massive buying opportunity, we skyrocketed. Came down, got below it, skyrocketed. We've come below it. History says it's presenting a probabilistic buying opportunity for those that are able to remain non-emotional and see it that way. You know, it's interesting because a lot of people will say they get into this market for the technology or for the long-term promise that the space holds, and they see great potential in Bitcoin and other crypto assets. But when you go through a correction like this, you really see the emotions come out. So, and we'll get into it in another chart because things have certainly corrected deeper than I and many I respect thought, but it's presenting an incredible buying opportunity. This is what I'm trying to point out in these charts. So this is the same view, a monthly chart, okay? And I had shared this on Twitter, but there's something very key that I want to point out in here, okay? And we'll get into Elliott wave analysis in a little bit. So current thought process is we moved up in a wave 1 here, had a corrective wave 2, moved up in a wave 3, and now we're in the midst of a wave 4, okay? That is the current thought process from Elliott wave technicians whom I respect, who I will speak to. But what I'm specifically pointing out here with these time frame bars, I want you to specifically look at the 6 bars here and the 13 bars here, okay? Every time Bitcoin has gone through a corrective structure where we have bottomed, what I'm signaling here in December of 18, once we bottomed, is it took 6 months to reach a top. Back in March of 2020, when we hit that bottom, from that point all the way up to our top of 64,000, it took 13 bars or 13 months. So what I'm hypothesizing, okay, is that if we've bottomed, okay, if May was our bottoming candle in the $25,000 range, we could use prior history in these past 2 corrective wave structures where we saw Bitcoin bottom and then rise, to say, okay, well, if today is similar to the past, we can expect that Bitcoin will top out sometime around 6 to 13 months after we bottomed in May. Now, obviously, this would change if we have another capitulation wick and we haven't bottomed, and let's say we bottom in June or July at 23 or 24 or 22,000, okay? But for the sake of conversation, if we have bottomed in May, I'm saying, okay, well, using past history, if we extend this out and theorize in terms of where Bitcoin could top, that's suggesting 6 to 13 bars, or because this is a monthly chart, 6 to 13 months. That puts us between November of this year, 2022, to June of 2023. That's what I wanted to point out here. This chart, yes, I kind of was anxiously awaiting to update on this chart. Now, one of the videos that I had posted about on my YouTube channel, by the way, if you appreciate the content, drop a like and subscribe to the channel, drop a comment. One of the videos that I had pointed out, it was the Bitcoin King of Triangles, okay? And this pattern here, this is a weekly chart. This was a valid, in fact, it was a bull pennant at the time. It was a bull pennant and it was ascending triangle. We had a roof here, a low, hit the roof again, a higher low. And I was theorizing, based not on certainties, but on probabilities and this pattern playing out, we would again hit this, it would become weaker, and we would eventually break up towards a technical target of 150,000. This is a great example of why there is no methodology, whether it's technical analysis or you're going to say you evaluate the fundamentals. There's nothing you can solely rely on that will tell you with 100% certainty what will play out. Look what happened here. This pattern is invalidated. This is not an ascending triangle. It was, okay, it was playing out at the time to be an ascending triangle, but it is no longer an ascending triangle. And it's one of the things that I think a lot of people who rely too heavily on others and are not educated themselves, they don't, you really have to, when you're following someone on Twitter or YouTube and you appreciate their content, you really have to ask yourself a very important question, which is what word choices and their communication style, how are they coming across and how are they presenting the data? I have always consistently said to you that I'm reading the chart unemotionally here, as crazy as I can be at times, unemotionally reading it and providing you with probabilities, right? It's in my intro video on YouTube. I provide probabilistic statements. So there are no certainties. I'm reading the chart and telling you what I feel is most and least likely. So at the time, there was an ascending triangle. It has not played out that way. So we have that ascending triangle that has been invalidated. Let's look at something else on the weekly chart that may be telling us that if we have not bottomed, we're very close to our bottom. And again, this presents an incredible buying opportunity. I want to look at this RSI again. As you can see a zone back here in 2018 when we got in between, it looks like 29 to 34. We'll just call it 34. This area down here told us historically that it presents, the RSI at least, the Relative Strength Index was telling us this is presenting a great buying opportunity. Bitcoin is oversold. You may want to consider scaling into it. And look what happened. If you bought back here at 3,200, like myself, if you had bought back in here at 3,200 and rode this thing up to 13,000 and kind of rode this wave up, we're sitting at around 28, 29,000 right now, right? So we touched it here in December of 18. It looks like during the March 2020 crash, we touched 33.51, and look where we're at right now. The RSI is at 33. So we're right in this zone that's telling us, hey, this is in layman's terms what this is telling us. Based on history, okay, it's not a guarantee that the RSI won't break these levels and we won't go lower, but based on history, if you zoom out and you have a longer time horizon and perspective on things, this is presenting an incredible buying opportunity. I'm not here to tell you that we definitively have bottomed. I'm not here to tell you that in the next 3 weeks we're going to bottom. I am here to educate and to help you and to read the charts and tell you what history and the current price action is telling me. And again, it's all about making probabilistic statements. So the Relative Strength Index on the weekly chart is telling me this is presenting a great buying opportunity. The last thing I wanted to touch on the weekly chart is this 200 simple moving average. You can see in the past it has presented support, right? Support. Well, right now the 200 simple moving average is sitting at 22,300. The more weeks that go by, and this is the thing you have to understand about the 200 SMA, the more weeks that go by and price stabilizes in this area as it has, maybe it kind of comes up and rides in here, this 200 SMA is going to continue to rise, such that if price were to stabilize in this area around 28 to 30, 33,000, whatever the case is, this 200 simple moving average is sitting at 22,300 right now. In a matter of a couple months, in August, September, it's going to be all the way up at 25, 26,000. So in the past, the other thing to keep in mind is if we do get a capitulation wick anywhere near the 200 simple moving average on the weekly chart, that history tells us it presents an incredible buying opportunity. So you're going to want to watch out for that. Now, I wanted to zoom in more on a micro level, and this is going to be interesting to look at. See, one of the fascinating things for me as a data scientist, as an actuary, is the more data points we get now, it'll help us in the future to discern what is most probable going forward. So one of the charts that I've spoken very heavily to on this channel, and no one else, I've said this, no one else has spoken to the historical significance of this, is the 12-hour chart. And one of the things as a statistician that is important when you're evaluating past data and then trying to project things moving forward, there's something called a sample size. A sample size are basically a number of events, okay? So one of the irritating things that I've seen some YouTubers or some people on Twitter speak to are events that have occurred in Bitcoin's past where the sample size or the number of times, the number of occurrences or number of events is 1 or 2 events. Well, it's very hard to draw a meaningful conclusion about what's currently going on and what might happen if you're basing it off a sample size or number of occurrences of 1 or 2, okay? Versus the reason that I came up with this 12-hour chart, even though it's a smaller time frame, it's a day cut in half, there were like 19 or 26 occurrences I was speaking to, right? Bitcoin has limited price data. It has 11 and a half years of price data. So there's only so much data we can draw meaningful conclusions from using past data moving forward, right? So when someone looks at a monthly chart and says, well, this has happened in the past, yeah, it's happened twice, okay? So it's hard to draw a meaningful conclusion from 1 or 2 times that something has happened in the past versus this has happened 19 or 26 times, right? So let's talk about this 12-hour chart, because I do think that if you choose to pay attention to the 12-hour chart, in many ways it can be a leading indicator to tell you when a true trend reversal will occur and bleed over into the higher time frames. I've said this over and over and over again. Now, we've had a lot of consolidation in between this green area of support. You can see we're right in there right now, and this red area of resistance. So right now, essentially what's happening is Bitcoin is just chopping around. That's all it's doing. It's just chopping around, okay? And the emotional psychology that this plays with people who are not disciplined and well-educated is it weeds people out. I've said this on my YouTube channel since 2020 or 21, whenever I really started going at this thing in YouTube. These are the times, the true times that weed people out. If you don't know what you're invested in and you're not patient and disciplined and well-educated, you are very likely to make the worst decisions that you will regret years from now, okay? We are chopping around right now. So what I want to look for on the 12-hour chart to tell me as a leading indicator that things might start to reverse and go in a bullish direction on the higher time frames, which are more important, okay, more price data in the candlestick, higher time frames, more important. What I want to look for first off is I want to see candlesticks get above the 50 simple moving average. Now that is this purple line here you see on the screen. So let's get above the purple line. Once we get above the purple line, now what we want to see is we want to battle the 200 simple moving average. We want to get above the 200 simple moving average, and then we want the 50 to begin to curl up and create a golden cross above the 200 simple moving average. The only other thing I would add on top of that is you don't want the 200 SMA to be coming down. You want the 200 SMA to flatten out and the 50 to begin to curl up and price to really remain above that region. Once you begin to see that, based on history, you'll have to go back to my prior videos in the 12-hour chart, it should be a leading indicator and fill you with confidence that there's a high probability that we're going to see a macro bullish trend directional change for Bitcoin and all of crypto. Now, I've hit on this plenty of times on this channel and on Twitter. Why am I focusing so much on Bitcoin? Maybe you have love and affection for HBAR, if you're on this channel, or Harmony One or Mana, as you can see. The Holy Crypto Trinity. By the way, do you like the new background? Please drop a comment, because I'm really loving the new artwork back here. It's a lot more colorful. You know, we also have, can you see this on the camera? You can't see this on the camera. I gotta switch this camera here. Hold on. There we go. See, we also have a bull, because I'm still the CryptoBullGod. I'm going to get into the Elliott wave formation that I wanted to speak to in terms of why I think this is a corrective structure within the overall market and not a huge bear market that we're in right now. But anyway, where was I going with that? Oh, yes. The reason that I'm focusing so much on Bitcoin is Bitcoin is the driver of value. It represents nearly 50% of the cryptocurrency market. How Bitcoin goes is how the direction of the rest of the market's going to go. If Bitcoin is down 50, 60, 70%, your alts are not going to be flying high at all, at new all-time highs. It's just not going to, and you can see this. This is just, there has been no decoupling, okay? The whole market is tied together. It's a risk-on asset, a risk-on industry, okay? So as Bitcoin's coming down, all your alts are coming down even harder. And as Bitcoin begins to recover and go up, your alts are going to go up a lot harder, okay? So that's why I'm focusing so much on Bitcoin. Now, if you're subscribed to the channel, you know that, but just a refresher. Now, let's get into this chart here, and there's a reason I'm pointing this out. So this is Digibyte, okay? And I've tweeted on this quite a few times lately, and there's a reason I'm pointing this chart out in particular. This project has a lot of history. You can see it goes back to 2015. And as such, it's built market structure. And to me, this has very beautiful market structure. I've commented on market structure before. Some of the most beautiful market structure I saw was in Mana Decentraland, and you saw what happened to that last year. Well, this thing has beautiful market structure. Look at this ascending line of support that it's hit, okay, and that we're resting on right now. The other thing I wanted to point out, and this is present on a lot of other altcoins as well, is look at how low the relative strength index is. If we go all the way back here, we can see back in December of 2015, we were at about 42, 43 range, right? You can see we were all the way down here at, I don't even know what that value is, 0.00015, okay? And you can see we shot way up. Down here, look what happened when we rode. Let me point this out. Look what happened when we got down here and rode this area down here. And I'm pointing out an area of support right around 42, okay? So an RSI of 42. Well, once we got down to this level, we shot way up in price and we went up to 20 cents. We're right at that level right now. We're at 43, okay? And this is on a monthly view. So what I'm saying is, and you'll see this on a lot of other alts in similar ways, is the RSIs, the price data, they are at historic levels right now. Historic levels are very suppressed levels, okay? And this isn't to tell you that things have bottomed, okay? But if they haven't bottomed, they're about as damn close to bottoming as you can get, because we are at historically oversold levels, okay? That's the whole reason I wanted to bring this up. It's one of the most beautiful things about this chart is that Digibyte has been around for a very long time. So there's a lot of price data and a lot of meaningful data here that you can draw conclusions on. So we're at an ascending area of support. The RSI is at a historically oversold level. So to me, this looks like a very juicy buying level, okay? And again, you see this on a lot of alts. And speaking of alts, another important chart that I wanted to point out for everybody was the ETH BTC relativity chart, okay? Ethereum, in many ways, is going to guide the direction of the overall altcoin market, okay? It is the king altcoin. We always talk about the flippening and coins going above Ethereum. It hasn't happened, okay? Not saying it won't happen someday, but it hasn't happened. So if Ethereum is presenting a lot of strength in the market, that's going to help to lift up a lot of the other projects like the layer 1 and layer 2 projects, but really all the altcoins, okay? As you can see here, it's just sort of a cup and handle formation. We've sort of, and I pointed this out on Twitter, and many others have too, but we've had this rounding bottom consolidation. And the other thing that I wanted to point out here is we're in this green area of support right in here, right? And this is a monthly view. So I believe, looking at this chart, okay, if we're patient, this green area of green area of support holds, my thesis is, we're in here for a little bit. We break out, Ethereum hits all new highs in price relativity versus Bitcoin. Your alts are going to rise dramatically as well, okay, as you can see by my face. So this is a very important chart that you'll want to keep in mind and take a look at, but I'm just seeing a whole lot of strength here. Ethereum has been creating a low, a high, a higher low, a high, a higher low, a high, and higher lows. So a lot of strength here in the Ethereum BTC chart, which is good for Ethereum and all the other altcoins as well. A lot of charts today. So again, if you appreciate the content, make sure you hit the thumbs up button and drop a comment. We only have a few more charts to get through. The DXY is an extremely important chart. Now, I've pointed this out many times before. Now this chart, what it's showing you is every time the DXY, the dollar index, this is on a 2-month view, every time the dollar index has decreased dramatically in value, and we've seen a sharp drop, it has coincided with a massive increase in the crypto markets and a massive bull run. Okay, they have an inverse relationship. Dollar go down, crypto go up. That's what happened here. That's what happened here. This is a 2-month view, by the way. Look at how many green candlesticks we currently have. This is a May-June candlestick. So if this May-June candlestick were to close, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 green. We have 9 green candles. That's never happened in the history of this chart. Okay, so this thing, as much as I'm not going to call that it has topped, it's at historic levels and in a historic area of resistance in this 104 range. And if it hasn't topped, it should be topping out most likely soon. Okay? We've had this parabolic rise in the dollar. It cannot continue forever. The other thing that I wanted to point out, this is a monthly view, is this is a nasty candlestick last month. This to me looks very similar to a gravestone doji, which typically is a trend reversal candle. So what that would mean is it's a bearish candle. We've been going up. This candlestick is telling us there's a high probability that we're going to have a trend direction towards the downside. Okay, now currently June is, we're only a third of the way through June and we have a green candlestick. But again, we're hitting this massive area of resistance here around 104. The other thing I wanted to point out here real quick on the dollar index is if we do get past 104, there's a huge area of price confluence right up here around 110 to 104, right in this area here, whether it's resistance or support. The video is going a little longer than I had anticipated, so I'm not going to touch on every point here, but there's just a lot of price confluence here. So the dollar very well could wick up all the way to 110 before we see a massive correction. But again, if we haven't topped, we're very close to it in the dollar, and history tells us they have an inverse relationship, the dollar index and crypto. So as soon as we start to see a large pullback in the dollar index, we will most likely see a very large run in crypto. Let's get into our last point on the charts, and that would be Elliott wave analysis. And I want you to give this gentleman a follow. If you're not following him already, Leb Crypto, because I'm going to be using his chart here, which I think is very beautiful. So one of the things on my to-do list this year was to become an Elliott wave technician, to really get good with Elliott waves. I have not gotten there yet. I haven't studied it. So I would be doing an injustice to you if I stood here, because I am standing, I'm not sitting. If I stood here and I attempted to speak to Elliott wave, I'm not going to do that. But I do rely on many other people, few other people who I highly respect, like Alessio Rastani, Credible Crypto, Tech Dev, even DIY Investing. He does a good job too. But they do a very good job of laying out Elliott wave analysis, and they are Elliott wave technicians. And what you can essentially see here is there's 5 waves in Elliott. In an Elliott wave, okay? You have a big move up, wave 1, a wave 2 correction, a wave 3, a massive move up for wave 3, a wave 4 correction, and then a wave 5 final sort of top to the entire process. Then each wave, each 5 waves, they have subwaves, okay? So the 1, the 3, and the 5, you can see they have, all of them have a 1, 2, 3, 4, 5. They each have 5 subwaves. And then the corrective wave structures, the 2 and the 4, they have an ABC, what's called an ABC correction. So they have 3 waves sort of down, okay? Now what's depicted in here, there's a couple really important things that you want to take away from this, okay? First off, we're still waiting for wave 5, okay? The Elliott wave technicians who I've spoken to, all of them agree that we have not had our wave 5. Okay, we're still in the middle of a wave 4 correction. Okay, so we're still waiting for wave 5. The second thing to point out is there's something called, and this is something newer that I learned, there's something called an expanded flat correction which can occur with Elliott waves. You can see this A wave down right here on wave 3. But then look at B. B actually exceeds the top of wave 3. Okay, so it's like a head fake, a pump fake in football. All right. So wave B actually goes above 3, fakes everyone out, thinks we're going higher. I did. I thought we were going higher. I was wrong. And then we fool everyone and come down for our C wave structure here. Okay. So what I'm saying to you is, just like if you're subscribed to this channel and you're listening to me and you're using me as a data point and relying on the expertise that I can provide, I am using the Elliott wave technicians who I know, because I'm not very well versed. I know the basics of Elliott wave, but I'm not well versed in it enough that I really need to rely on other people as a data point. So that data point, which consists of 4 to 5 people, they're all saying the same thing. Okay, and these are, especially Alessio Rastani's been in the market for years. We're still waiting for a wave 5. We're still waiting for a wave 5, and all signs are pointing to this being an ABC expanding flat correction. So this is another thing to feel very bullish about. But the other thing I want to point out here is I wouldn't pay attention so much to the time period. Let's go back to this chart. Whether Bitcoin does ultimately, whether we ultimately did have our capitulation candle on the May candlestick here, and it's 6 months or 13 months, and this thing runs into the first quarter of 2023 or the first half of 2023, we're still waiting for this wave 5 movement up here. Okay, so that is the last chart that I wanted to take a look at, but just a couple other quick things with you. Another non-chart, but sort of, I guess you could call it a data science model, is the Greed and Fear Index. This is really important. Hopefully you've stuck around this long. If you have, thank you. Drop a comment. Let me know if you find the Greed and Fear Index commentary helpful. But one of the things that I found very interesting, and a few other people have pointed this out, you can see in May, look here, May 8th of 2022, the Greed and Fear Index was 18. Since then, okay, now we are over a month later on June 11th. It's 2022. I still can't get used to that. I think it's 2021. Excuse me, in 2022, all right? So over a month, the Greed and Fear Index has been below 20. Every time we've done that, if we come down, if we go to our max here, and it's kind of hard to see, but when we have a cluster of Greed and Fear Index under 20, 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 these have marked bottoms. Okay, everybody's salty. Everybody dislikes. I won't use the word hate. Everybody dislikes people like myself who are bullish. The crypto fear bringer. So he texted this morning about shitcoin. For those who aren't subscribed to the Crypto Bro podcast, we're going to be resuming that. So I'll drop a link to that. But my brother, crypto fear bringer, he texted this morning about shitcoin and just the saltiness in the market. And I think it's, as much as there's humor and seriousness in what he was saying, I think it best exemplifies just the attitude in the market. People really dislike people like myself. Oh, that's right. He said that I need to change my name from Crypto Bull in all capitals to lowercase, right? And which I'm not going to do, because I believe we are in a bearish structure with an overall bullish trend. A true bear market has not ensued and will not ensue until we get that 5th wave, okay? We're in a corrective structure right now, not a bear market, okay? That is my view. That's why I haven't changed my name. But the sentiment right now is so freaking salty and so angry and even bored and just complacent, and this shit's over, and the world's falling apart like it was in March 2020 when the beer virus hit. So the market's so salty. And when you get those deep pockets, look at December of 18 and March of 20, and last summer when we had our temporary bottom at 30,000 or 29 or 28, when you have that much cluster under 20 in the Greed and Fear Index for like a month, it has historically marked bottoms, and that's what we see right now. The very last thing I want to point out to you, just to keep things real, and this actually better exemplifies it, you can see the pockets here. So, but anyway, the last thing I wanted to point out to you, look at the total market cap of cryptocurrency. It's 1.15 trillion. For those of you who are not good with numbers or can't conceptualize how big or small that is, 1.15 trillion. Apple, a technology company, most known for phones, 2.23 trillion, okay? So Apple at 2.23, let's just call it 2.3, is a 2x, is this one technology company is 2 times as large as every single freaking cryptocurrency project that's out there. The entire crypto market cap is half of Apple's stock. People, zoom out. I know it's a tough market. Things have corrected longer and deeper than what I anticipated. It doesn't mean that we're not in a corrective structure. And when you zoom out, it's presenting a generational buying opportunity for you going out into next year and beyond. Please, I hope this channel helped you to see that. If it did, please drop a like, hit the thumbs up button, drop a comment, subscribe to the channel, hit the bell icon. And then until next time, spread awareness, and let's carry that education forward.
So what you gonna do, $5 on CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you?